أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله الصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. Welcome to our sixth class. Today is the last day for the second week. So now we have completed 2 weeks and we're going to do a quick review of what we have studied so far and test our understanding with some questions. Let's start with a few concepts that we started to discuss at the beginning of the course. The first is purpose of audit, right? What is the purpose of audit? Who can tell us the purpose of audit? Anyone? Anyone there? Can you hear me? Muhammad Al-Sada says to ensure there is no fraud in the company. Is that the purpose of audit? Anyone else? To provide an independent opinion about the financial statements. So that is the purpose of audit. The purpose of audit is to give an opinion on the truthfulness and the fairness of the financial statements, right? Now, who's responsible for preparing the financial statements? The management of the company that you're auditing is responsible for preparing the financial statements. In the auditor's report, you will always find at the beginning it says, we have audited the financial statements of such and such company. And then it will say that the financial statements are the management's responsibility, the management of the company that they're auditing. So the financial statements are their responsibility, the management's responsibility. The auditors do not prepare the financial statements. The management of the company under audit prepares the financial statements. The auditor's opinion is about the truthfulness of the financial statements. Why is it necessary? Because the management of the company operates the business and the management of the company also prepares the financial statements. So there is a possibility that if the operations are not that good, the financial statements can represent something other than what the reality is. So the financial statements may look good while the operations are not good. While there is a loss, the financial statements could show profit. So we need someone coming from outside, the independent external auditors, to give an opinion on the financial statements. All right. Now, the auditors come and look at the financial statements and they give an audit. They give an opinion. How many different types of opinions did we discuss? How many different types of opinions did we discuss? Can you remember? 4. Very good, Faisal. Excellent. What is the first type? What is the first type? The more you participate, the smooth and easier it will go. What is the first type of opinion? Unqualified. Very good. Unqualified, if we were to replace unqualified with another word, what would that word be? If we said unqualified, what is another word for that? Good. Very good. That means when we say unqualified, good means that we say that the financial statements are true and fair. The financial statements are true and fair. What is the second type of opinion? Qualified, right? Qualified. If we were to replace qualified with something else, if we were to say something else instead of qualified, what would that be? What would you say instead of qualified? Good but. Excellent, Faisal. Good but. Financial statements are good, but you should know something else which may not be that good, which may not be that good. Okay, so that's the second type. What's the third type? The third type of audit opinion in what is what? The third type. Anyone? What is the third type of audit opinion? Disclaimer is the fourth type. The third type is adverse, right? The third type is adverse, right? Adverse means what? Adverse. One word for adverse, another word for adverse would be adverse. Bad. Very good. Adverse means the financial statements are not true and not fair. The fourth type, as Ahmed said, is disclaimer. What do we mean by disclaimer? Disclaimer means, how would we say disclaimer using another word or another phrase? Anyone? Come on, guys. Participate. Even if this is the wrong answer, provide the wrong answer. Right? Faisal says don't know. Is that you don't know the answer, or disclaimer means don't know? Disclaimer means don't know. That's very good, Faisal. That's very good, right? Just messing with you a little bit, Faisal. So, uh, don't know means we don't know whether the financial statements are good or the financial statements are not good, right? Not determined, undecided, not sure, because we do not have either do not have enough information, or the client did not cooperate, or we could not go to a location where we needed to verify something. So it could be a number of things, right? Now, these are the four types of audit opinion. Now, I'm going to ask you a question that I did not discuss with you before, but let me see what your opinion is. What is the most common type of audit opinion, do you think? The most common type of audit opinion among the four, which one do you think is the most common? Sharat says probably the second one. The most common actually is unqualified. The most common is unqualified. Okay, modified. Ali, where do you get modified? That's not one of the four that we discussed, right? That's not one of the four we discussed. Unqualified, right? Unqualified is the most common. Okay, the reason is most accountants working for most companies are qualified and they do the work properly and they're speaking the truth most of the time, and the auditor is able to make the company adjust the financial statements if there are some small errors here and there, so that they can give an unqualified opinion. So most opinions are unqualified opinion. Now, the next point we have here is, the company, um, prepares the financial statements over a period of 12 months. And as auditors, when we come in at the end for a few weeks, is it possible for us to look at everything that the client has done? Is it possible? Can we look at everything the client has done? Look at every single transaction, every single debit and credit? It's not. So what do we have to do? What do we have to do in order for us to give an opinion? We have to sample, right? So there is a reason for sampling, and that is we cannot look at everything because we don't have time and the time and resources to do that. Now, there is something called a representative sample. What do we mean by a representative sample? That is correct, Ahmed. The unqualified is because most of the time the financial statements are true and fair. Most of the time the financial statements are true and fair. Okay. Now, representative sample, who can remind us what we mean by a representative sample? Sharat says we can say the financial statements are true and fair even if it's qualified. We can. The qualified means that there is something that you are not entirely satisfied with about the financial statement, right? And that is not the case in most of the time, because in most of the situations, because the auditors uh, recommend certain changes in the financial statements after the audit because they don't think that those accounts are represented properly, and most of the time the clients make those changes. So I remember writing down many journal entries for the client to make to adjust the financial statements, and not a single time in my uh, 8 years working as a public accountant has it happened that the client said we're not going to make this adjustment. So it is not something that is common. So the financial statements, if they are not exactly according to the auditor's satisfaction, they are adjusted. Okay? Does that make sense? You follow what I'm saying? And we're going to discuss all of this in details when it comes to adjusting entries and so forth. We're going to discuss all of that. Okay? All right. Now, let's go back to what we were discussing. What is a representative sample? Anyone? It's an easy question, right? What is a representative sample? Choosing a sample that represents a higher population. What does that mean? The sample represents the population. Yes, of course. But what does that mean? It represents the population. What do we mean when we say the sample represents the population? What does that mean? It means it has a similar distribution. It has a similar distribution as the population. So in the population, if there are 50 males and 50 females in your sample, you would have the same 50-50 distribution. There are 5% errors in the population in your sample. It would be very close to that 5% error. So that's a representative sample. If you conclude about the population based on a representative sample, then your conclusion would be accurate. But that may not be the case always. So that brings us to the next concept, which is sampling risk. What do we mean when we say sampling risk? What does that mean? The sampling risk, Faisal says the chance that sample does not represent population. Excellent. That is exactly right. So the risk, the small risk that there always is that the sample may not represent the population. So the sample is something and the population is something else. So from this sampling risk, we can have how many different types of errors? How many different types of errors could we have? We discussed this, if you remember. Two types. What is the first type of error? What do we call the type 1 error? Type 1 error is also known as also known as incorrect rejection, right? It is called incorrect rejection. Incorrect rejection means your sample has uh, many errors, but the population actually does not have many errors. So based on that, you reject it, right? Based on that, you reject it. You have many deviations in the sample, but the population does not have that many deviations. So we reject the sample population based on the sample because the sample has a lot of errors. So that's type 1 error. What is type 2 error? What is type 2 error? Type 2 error is incorrect acceptance, right? Incorrect acceptance. Incorrect acceptance means your sample is uh, it looks good, but the population is actually not that good. So in the sample, you do not have many errors, but the population has a lot of errors. So in this case, you say the population is good based on the sample, but the conclusion is wrong. So from these two types of errors and the sampling risk stems the confidence level. The higher the confidence level is, the more sure you are about the representative sample. So to have a higher confidence level, usually you have to increase the sample size. Usually you have to increase the sample size. Okay, any questions on what we discussed on this slide so far? This is all clear and coming together for you, right? The second slide, we have a few more concepts. The first one is tolerable error. What do we mean by tolerable error? When we say tolerable error, what does that mean? The error rate below which it is acceptable, the present of mistake, the percentage of mistake we can accept, right? So the amount of errors we can accept and still say the account is fine or the control is working. So that's the tolerable error. It's usually within the sample. So we need to calculate the tolerable error in our sample. What is expected error? The error that will happen, the error that we think that there are, right? The number of errors we think are present in the population, right? So the number of errors we think the population has is the expected error, expected percentage of errors. All right. Now, we discussed how many different types of sampling. How many different types of sampling did we discuss? 3. What is the first one? No, that's the uh, that's an individual. Those are individual tasks in steps of a particular type of audit sampling. There are how many types of audit sampling, and we only discussed one of them in detail, right? The type. So we have the types, and then you have the steps, and then you have the individual activities in the steps. What you're describing is a particular activity in one of the steps of one of the types of audit sampling. There are 3 types of audit sampling that we have discussed. The first one is attribute. The first one is attribute sampling. We discussed 3 types. The first one is attribute sampling, right? In attribute sampling, we have number of steps. In each one of those steps, we have individual tasks. One of those is to select the sample items, which is using the random sampling for selecting sample items, systematic sampling to select the sample items. You follow? So keep this structure in your mind. We have 3 types of audit sampling. The first one is attribute. What is the second one? We discussed 3. There are others, but we are discussing 3. So we have discussed first, we mentioned attribute sampling, and we discussed it in details. What is the second type we discussed, we addressed, or we introduced? The second type. Monetary unit, ring a bell. What is the third one? This classical variable sampling, ring a bell. These are the 3 types. So we have attribute sampling, monetary unit sampling, and classical variable sampling. We have discussed the steps in the attribute sampling in detail. How many steps did we discuss in the attribute sampling? 4. What is the first one? What is the first step? Plan. What is the second one? Perform. Very good. What is the second? What is the third one? Evaluate. Very good. The fourth one is document. Where are the others? Where are other students? Why aren't you participating? We have plan, perform, evaluate, and document. Those are the 4 steps in the attribute sampling. Inside these steps, Sharat, is what you described, right? In the step perform, one of the things that you have is to select the sample item. Selecting the sample item requires either random, systematic, or haphazard. Those are, inside that. Okay. Now, the last point we're going to discuss is the purpose of internal control. Purpose of internal control. Before we go into that, what is internal control? When the management puts in place internal control, what does that mean? They have internal control. What do we mean by that? Put a system in place to minimize errors. That is not a wrong answer, but a more precise answer would be to have policies and procedures ensure to have policies and procedures to ensure a number of things, right? Policies and procedures to ensure number one, preparation of true and fair financial statements, effective and efficient operations, and compliance with regulations. So the purpose of the internal controls are policies and procedures to ensure preparation of true and fair financial statements, effective and efficient operations, and compliance with regulations. So the company puts in place certain things that every employee and management member should do to make sure that the company prepares a true and fair financial set of true and fair financial statements, operates effectively and efficiently, and complies with regulations, right? And when we come in as an auditor, which one of these three goals of the internal control is the most important for us? All of them are important for us, but which is the most important for us as auditor? If it's an internal control related to which one of these three uh, are we going to be most concerned with? Compliance with regulations? Do we give an opinion on that? What do we give an opinion about? Our opinion is going to be about, when we say unqualified, qualified, our opinion is about what? Number one, we are worried about the financial statements because we are going to attach our opinion, our name with the financial statements, right? So we are going to be worried about that the most. All right. Do you have any questions for me? This is an overview of what we have discussed so far, and the individual videos are available. You can watch them again if you have any confusion. Do you have any questions for me? If you don't have any questions for me, I have some questions for you. So this is the first question. Answer the question using the poll, and then we'll discuss. Okay, so we have 3 students answering A, and the right answer is A. So which of the following best illustrates the concept of sampling risk? A randomly chosen sample may not be representative of the population as a whole, right? So that's what sampling uh, risk is, that your sample that you select may not be representing the population. Any difficulty in understanding? This is a very basic question. If you have any difficulty in understanding this, please ask me and I will explain. Clear? Why answer is A. Okay, next question. So we have here 3 students who answered D, and the right answer is D. Why is the right answer D and not B? Because in every one of these others, there is a testing of a balance or an amount. When you're doing the testing of internal control, you're testing the procedure, not the balance or the value or the estimate of an amount. Internal controls are testing of internal controls, right, are done using attribute sampling, and testing of internal control includes testing whether they follow the procedure or not testing whether the amount is correct or not. Is that clear? So inspecting employee time cards for proper approval is testing of a procedure. All right? Is that clear? All right. Next one. Subsequent cash receipts. So we have 3 students who answered number 3, C. It says treat the unreadable check in the same manner as the majority of the other checks. Here you have to know the audit procedure, otherwise you won't be able to answer this question. The audit procedures say that you have to treat that as a deviation, right? If you cannot read something, if it is not clearly readable, the audit procedures say that you have to treat that as a deviation, right? We discussed this, and if you have any doubts, you should go back to the previous lectures and listen to and make sure and study and make sure that you know the audit procedure. Here, in most of the times when there is a question about a particular audit procedure or a rule about an audit procedure, you cannot reasonably conclude most of the time. You have to know what is allowed and what is not. So if you cannot read something when you're testing something, then it is considered as a deviation. Ali says, can we ask the client? Yes, you can. You can. But the audit procedure said that you don't have to. If you ask, that's from your kindness, right? That's from your kindness. But that is not something that you have to do. What you have to do, what you can do, the audit procedure allows you to treat that as a deviation. So let's stick to that. In real life, we do ask the client, right? But you should know what the audit procedure says. You follow? I discussed this as well, right? What the audit procedure says and what is done in reality. We are not asking what is done in reality. We're asking what should the auditor do, what the audit procedure says. Is that clear? Okay, very good. Now last question. Say, who do you agree with, right? Okay, so 5 students say that they agree with Layla, right? And that is the right way to go, because the if you have only a few sample items that are large, then you can test all of them. There is no need to sample. And we discussed this. that the audit procedures for sampling say that if you only have a few large items, no need to sample, you can look at all of them. Okay, and again here, you have to know the audit procedure. You cannot usually come to the right conclusion by reasoning, although you could, but it's not necessary that you find it logical. Okay. All right, any questions so far? We finished chapter 8, alhamdulillah, so we're going to start chapter 9 on Sunday, inshallah. We don't have any questions. Have a great weekend, and I will see you inshallah on Sunday. Okay, assalamu alaikum wa rahmatullahi wa barakatuh.